Wednesday, December 20th, 2018, Maneco 64, home of alternative economics and contrarian views. Before I start today, a few words of thanks for all the existing subscribers, all the new subscribers, all the support for the channel, all the comments you leave, all the thumbs up. It gives me great feedback. About the flags, you can see I just got a French flag. I've got the British Union flag and the Stars and Stripes. Does that mean that I support our government? No. There's an old saying, I love my country, but I hate my government, and that's how I feel. And it shouldn't be like that. The reason I got the French flag is it starts with the UK Union flag. When I started doing these videos about 3 years ago, we had that as a cushion there because we live here in the UK. A few years ago, we bought it. And then we started getting a lot of viewers from the US, and they said, well, where's the US flag? And then Canadian. I do have a Canadian flag, but I had to take it out to put the French flag. Don't worry, Canadians, it will come back. Yeah, that's just to show support for the people of those countries. Doesn't mean that I support the institution of government. So I wanted to put that straight. Today I want to talk about how central banking and especially the Federal Reserve are actually instruments of plunder of the public. And they're instruments of the bankers and Wall Street. And yesterday I watched the press conference of Jay Powell and all the questions from the press. And I have to say, it's very frustrating for someone who's has woken up to how corrupt the monetary system, the banking system is, to listen to that and to go through that and to see how blind and ignorant those people are asking those questions. Even Jay Powell, I'm not sure he knows exactly what the Fed is doing, and yeah, sometimes you wish, I wish I hadn't woken up, and because it's so frustrating, but actually that's not true. I'm glad that I know what's going on, and that's what I want to go through today, how central banking and especially the Federal Reserve are instruments of plunder and how they've done it over the last 100 plus years. Before that, of course, I'll have a look at the markets, what they're doing this morning. It's around 7:40 a.m. London. Yesterday, of course, the Fed didn't give the markets what they wanted. They were expecting the hike, 72% chance. But they're maybe expecting that the Fed would say, oh, we're just gonna wait and see now for 2019. We got no rate hikes on the slate. But no, they said, oh, we're still gonna do 2. It's less than the 3 from the previous meeting, but we're still gonna do 2. And the markets hated that. So the Dow was down 352 points, 1.5%. S&P was down 1.54%. NASDAQ was down over 2%. We finished on the lows of the year, I would say, well, especially the S&P. Year to date, the Dow's down 5.6%, S&P 6.2%, NASDAQ 3.8%, the Russell 2000 down 12%. So what are we doing this morning? Has the market rebounded? Well, no, we're still down. The Dow is down 100 points right now. The future 23,210. The low has been 23,043. So it's been down over around 300 points. And yesterday we dropped 900 from the highs of the day to the low of the day, because prior to the press conference by Powell and the Fed announcement, people were expecting, the Fed to pare back a lot more than they did. Gold, of course, was a bit frustrating yesterday. We got up to 1258 and then it came off after the Fed. But right now it's come back up. We went down to 1241. We're now almost back at 1250. We were up 5.5 at 1248.40. Just when I finish doing the prices, I'll show you the Dow gold ratio chart in a minute. Silver 1462 is up 3.5. We got up to 1484, I think, yesterday. 1491 is still the key level there. So as I said, the Dow is down 100 right now. S&P is down 12.5 points below 2,500. So we broke through that 2532 level I was talking about the other day. NASDAQ 100 future is down 0.5% as well at 6304. Currencies, we saw the dollar rally yesterday after the Fed announcement and the press conference, but this morning the dollar is actually dropping. The pound is up just over 1/3%, 126.55. The euro is up 0.4 at 114.22, and the dollar is down 0.5% against the yen, below 112, and that's an important pair to keep an eye on, because it means that the more the dollar drops, the more risk there is in the market. People are closing their yen carry trades, which I've spoken about many times, and I won't go over it here again because I haven't got the time. But suffice it to say, when the markets are under pressure, the dollar drops quite a lot against the yen. Dollar yuan 690.20, hasn't changed much since yesterday. The 10-year yield dropped quite a bit yesterday after the Fed. The curve did flatten. It's still not flat yet. 2s, 10s. Right now we're at 276, the 10-year yield. And let's just have a quick look at the curve. So right now we got 2-year at 265, the 5-year 263. So that's inverted 2 basis points. That's quite fairly significant. And the 2s, 10s, it was around, I think, 17 basis points, maybe a little less. And now there's only 11 basis points differential. So markets don't like what the Fed's doing. They think it's going to bring a slowdown. Stock market didn't like it, right? So oil prices are still subdued. WTI is still at 47.20. It's down 2% here, below 50, and Brent is down 1.5 at 56.50. Just wanted to show you because it was frustrating watching gold yesterday. But I wanted to show you the Dow Gold ratio, and that's why you need to keep a hold of your precious metals, especially after I talk about the Fed's mission, a covert mission, in my opinion, because their official mission is to maintain full employment and price stability, which is in my opinion, it's not the real mission. But look at the Dow Gold ratio here. This is from the last couple of years, and you can see that we're breaking down. That means that gold is performing very well against the Dow, the stock market. And why do we look at this? Because the Dow represents the paper economy, paper assets, and gold represents sound money. So here we go, Mr. Dent. Is gold collapsing? Maybe it's not going up that much, but it's holding on really well against the stock market. We closed below 19, which is fairly significant, I think, and I think it's going to keep going lower, that ratio. Of course, not in a straight line. Eventually, we're going to see a reversion to 1 on that ratio, maybe less, maybe more. And that's when, the rebalancing or reset, as people like to call it, will happen. And you can see that recently we got up to just above 22. And with that, I'll bring you a longer term chart because that shows you why that 22, level was so important. And this is going back 200 years. And you can see that there's this average green line there that comes in at just around above 22, and this is where we got up just above there, and now it's come back down. Also use this chart to talk about how I think, what the Fed's real mission is. Why is it so frustrating to listen to the press conference and the questions, from Steve Leisman, from CNBC, the people from BBC, Bloomberg, AP, Washington Post? Why isn't there someone, from the alternative? Why isn't Peter Schiff there? Why didn't they ask me to go there? I wouldn't mind asking some difficult questions to the chairman of the Federal Reserve. And yeah, of course, Congress has passed by law that the Fed's mission is to maintain full employment and price stability. I like the way they say price stability. They don't say maintain the purchasing power of the dollar, right? And for them, listening to that, it's to Powell. It's like it's imperative to keep what they call inflation, their CPI at 2%. And I just wanted to show you how the Fed has ripped off the American public for the last 104 years or so by going to this site. It's called officialdata.org, and it's a CPI inflation calculator. So I've done a few calculations on this, right? I went from 1776, Declaration of Independence, to 1913, which was the year the Fed was created. And I know there were two central banks of the the first Bank of the United States and second bank, but they never really got a foothold in the system. So I used this whole period from 1776, when America became independent or declared independence, and when America lost its independence to the bankers, right? So this is what's really really shocking. And this is coming from the Bureau of Labor Statistics, right? It says, in other words, $1 in 1776 is equivalent in purchasing power to $1.14 in 1913, a difference of 14 cents. So, so the cumulative price change in that period. So how long? 137 years was 13.79%. The average inflation rate was 0.09%. And that was before the Federal Reserve was created. To me, that's maintaining the purchasing power of the dollar, right? Then I went from 1837, which was the year the second Bank of the United States was, they didn't renew, Andrew Jackson didn't renew the charter. And we've got a dollar in 1837 is $1.03 in 1913. Cumulative inflation rate was 0.04%. So no inflation whatsoever. And are you going to tell me that America did not develop, did not grow, did not become the most powerful and biggest economy in the world by 1913? That's rubbish. Some of you have said, oh, if we didn't have all the inflation, maybe the economy wouldn't have developed as well in the last 100 years. Well, my question is, how do you know? Maybe it's in spite of all the inflation, the U.S. economy has done so well. But how much better could it have been if we had a dollar that maintained its value? And back then, the other thing I like to say is that the average person did not invest or save in the stock market. They didn't need to, because they could save in their sound money backed by gold and silver. And then when they retired, that money still had value. They could still get a fair rate of interest if they lent it. So the stock market was something for the very rich. And yes, there were stock market crises before the Federal Reserve. But people didn't care, because it was something, that they were not involved in and didn't affect the economy as much. So now, this is the how well the Fed has done then. And it just goes to show that the Fed is there not to maintain the purchasing power, and that price stability is just like a it's a it's a cover for what they're really doing, which is ripping off the public, and the public don't know about it. Well, the majority of them don't. You do if you're watching this, and I do. But so let's have a look. $1 in 1913 is the equivalent $25.46 in 2018. I mean, do you need any more proof that the Federal Reserve is just an instrument of legal plunder, and Congress has, your Congress that's supposed to represent you has given them this power? It's quite amazing. So the average inflation rate has been 3.13%. And now Mr. Powell keeps talking about how they want to have 2% inflation, but or CPI. And I'll show you here the impact of inflation calculator. So 2% over 5 years, the dollar, loses 9% of its value already. And this is actually trusting these, CPI or inflation numbers. If we change it to, let's say, 6%, and that's a rate that John Williams from Shadow Stats thinks where it really is. You change it to 6% over 5 years, the dollar loses 25% of its value, as you can see there. Just before I finish, let's go back to that Dow Gold ratio chart. So you can see here, before the Federal Reserve was formed, yes, the stock market did fluctuate versus money or gold, but it didn't really matter for the overall economy, because it was the casino for the rich. But look at since 1913. The stability that the Federal Reserve has created. And they also have, by not maintaining the purchasing power of the dollar, they force average people into the stock market. So they get a double whammy. They get you through the purchasing power of your money. You work for that money, and that money becomes worth less and less. And they get you as well with the pump and dump scheme of the stock market. So, and that's why I wouldn't be surprised if we go back to 1, as you can see there in that chart. So there you go. Federal Reserve and Congress are not looking after your interest. They're not necessary. The Federal Reserve needs to be abolished. Hopefully it will be, and good riddance to them, I would say. If you enjoyed this video, make sure you hit the like button, subscribe to my channel if you haven't yet, and you can also follow me on Twitter, DTube, and on Steemit. I wish you all a great day, and I'll talk to you later. Take care. Bye.